Welcome to the Dreamers Podcast. I have an amazing guest today. It's Chloe from Chloé Money Coach. You might know her from TikTok and IG and her exceptional dance moves while teaching personal finance content. Chloe is a money coach. She's focused on helping people learn how to invest the lazy way. And she's been featured on CNBC, Business Insider, Bloomberg, and many more publications. Chloe, welcome to the Dreamers Podcast.
Thank you so much for having me. It's great to talk to you again. I know we met around this time last year.
That's right. We met at FinCon, actually.
Yeah.
Tell me about your views about money growing up and how it shaped your young adult views.
Yeah. So when I was growing up, money was pretty tight in my house because my parents had 5 kids in 7 years. So we were all really close in age, and my parents weren't making a lot of money, at least not to fund 5 children in a middle class neighborhood in central Illinois. And so things were just always tight. We always had the lights on and we always had the privilege of having a home over our heads. But I always remember my parents talking about credit card debt and feeling like there was never any extra money to go around. And so from a really, really early age, I started connotating money with stress. And because I started connotating money with stress from a really young age, I knew I wanted to make money. I didn't know how to manage it and I didn't know what to do with the money, but I knew I needed to start working as soon as possible. So I actually started working around the time that I was 9 years old, and I've been working ever since. But I started doing concession stands and babysitting, and then I got a job at a coffee shop and just kind of always had something going on in the background. But even though I saw the stress that money caused my parents, or the lack of money caused my parents, I didn't think of how making money wasn't the solution. It was also learning how to manage money. So it took me years upon years of going between feeling like I was really good at hoarding money sometimes for like a certain activity, like moving to Spain or moving to China or doing those things. But then whenever that period of hoarding was done, I would just spend like crazy because I had no idea how to do anything other than hoarding money and spending money. And so it finally got really bad when I was in college and I was going through some really bad depression. For me, spending money was one of the ways that I could feel better. It was like you do impulse shopping or you do whatever to kind of get that hit of dopamine. But of course, if we're already struggling with money and then we're spending money as a way of coping, there are many instances where I was afraid I wasn't going to be able to pay rent. I'd have panic attacks. I'd feel so anxious about my lack of ability to have any sort of money in my bank account. And so that kind of just worsened everything until everything came to a head. And eventually I just decided, okay, it's time for me to figure out how to do this. But I didn't hit that point of it's time for me to figure out how to money until I was 27 years old. So it took another decade of struggle before I finally got to that point. But luckily, I finally did in my late 20s, and things have been a roller coaster since.
Well, 27 is definitely earlier than most people.
That's true. That's true. And that's the thing is everybody who gets started on their financial journey, whenever it is, they always wish they had started earlier. So it's like, I have to recognize 27 is still early. And like, I didn't start really investing until 29. At least I started. And that's the thing is we can always ponder on the fact that we didn't start sooner, but the best next thing is to start right now.
Yeah, the best time to start was yesterday, but the second best time is today. And
Yes,
you
exactly.
started in your, I guess, late 20s, and you've made great progress, right? You were featured in Next Advisor. You shared how you went from being $70,000 in debt to increasing your net worth by 300,000 in 3 years.
Yeah,
Right?
exactly.
Back when you were in debt, what were your finances like? Were you budgeting? What was your income like?
Yeah. So when I started talking about money, it was October 2018, which was when I had this come to Jesus moment of realizing like I just had a salary bump of going from making 70 grand a year to making 90 grand a year. And I had that moment where I was like, oh my gosh, if I do not learn how to manage this money, I'm going to blow through every single dollar just like I have every other promotion before this. So I really need to see where the heck is my money going. And That was October 2018. And at the time, I had that $70,000 of debt from a car loan and student loans. And what I decided to do was just write down everything that I spent my money on for 2 weeks, just 2 weeks. I didn't even go for a whole month. But at the end of 2 weeks, I went through and I started categorizing everything and seeing where my money was actually going. And what I realized after those 2 weeks was that I was blowing like $600 every 2 weeks on eating out, cocktails, and then being hungover. Because when I'm hungover, I'll just order food from GoPuff or DoorDash or whatever, anything to make myself feel better. And so when I really looked at that number, I was like, wow, if you looked at my spending, and I'm a big believer that where our money goes is what we value a lot of times. Now, obviously, we don't value our debt or things like that, but when we can decide where our money goes, when we have that discretionary income, that's showing us what we really value. And if you looked at my spending, it would tell you that I valued being drunk and being hungover. And it was like, that's not who I want to be. That's not what's important to me. If you had asked me what was important to me, I would have told you traveling, spending quality time with my friends, visiting my family, things like that. But I wasn't doing that stuff. I was YOLOing my money, going out to random things, doing things with random people, and not spending in a way that was at all aligned with my values. So that was a really big wake up moment for me, because the important thing is I realized I had money. It was just not going to the places that I wanted it to go to. And that is a lucky situation to be in, because I had resources. I could then decide to tell those resources to go where I wanted it to go. And so that was really a wake up call for me. It had to happen because I had to be kind of disgusted with myself to be like, okay, I'm ready to change. You have to have that moment of like, oh, this is not who I want to be, in order to decide, all right, I'm going to do better. And that's when I first started budgeting. And I had previously tried like the envelope method before, using all cash and things like that. And that never worked for me. And girl, I tried to do that for 2 years, but I kept trying for some reason. And so finally I was like, all right, clearly that's not working for me. So I decided to go onto Google and search for a budgeting template. And I pulled up the Google Sheets budgeting template, which is the budgeting template I still use. And I started making a zero-based budget and assigning my dollars to everything that I wanted it to go to. But my biggest thing was I decided, okay, looking at all the money I have and what I think is reasonable for me to spend in all of these categories, I could reasonably put $2,000 a month down on my student loan debt. And so that's what I started doing. I started with this focus that being debt-free was the most important thing, and that was the only thing I had to do. I'd worry about the investing stuff later because that seemed confusing and scary. So I only focused on paying off my debt as much as possible. And I will say, now I regret that. Like,
I was going to ask you. Yeah.
Yes. Yeah. And it's one of my biggest regrets when it comes to money management, is because those were still my years in my 20s. And we know that when we're investing in our 20s, those are some of our most powerful dollars that we could be using. And my student loan debt, it's at 3.54% interest rate. Why am I trying to pay that off early if cash flow is not an issue? And one time I did the math just to see how much paying off $40,000 in 2 years would have been had I invested that money instead, because that's a lot of money. If I had invested that over a 30-year period, it would have turned into $1 million. And I was like, oh.
But you know what, though? The interesting part about this is that I think also I do believe in investing while getting out of debt.
For
but
sure.
Also think about, you've been able to leave your job, right? If you still had that lingering over your head, it might have taken you more time to decide, okay, I'm going to go all in on this business.
For sure. Yeah, it might have been scarier to go out on the business just because it was a much larger number. But if my payments were the same, I don't know if that would have stopped me, because my payments right now are about $600 a month. And that's not an issue for me. I think that's when it's like really key, is like, if cash flow is a problem, then yes, absolutely. You need to figure out how to lower that debt and how to make it work within your budget. Because yeah, who wants to quit if cash flow is an issue and you're scared about paying that $600 every month? But luckily I had the privilege of really proving my business first and then deciding to leave, and was like, all right, my bare minimum expenses are this. Can I cover this every month? And I was like, yes, I can. So if worst case scenario happens, I know I've got this covered.
So did you have any credit card debt at the time, or was it just student loans?
No, luckily I never fell into the trap of credit card debt because I was so afraid of credit cards because of what my parents had been through. In fact, I did so much travel from the age of 18 until the age of 25 or 26 when I finally got my first credit card. To think of all the travel hacking I could have done in those years.
Yeah.
Honestly, it's probably a blessing that I didn't have a credit card because I'd never ended up in credit card debt. And clearly I was good at living above my means, but because I didn't have access to one, because I was scared of them and had grown up with this idea that credit cards were bad and you were going to ruin your life if you had a credit card, I never got into that debt.
So you went from living paycheck to paycheck to, how old are you now?
31.
To being 31 on track to retire or multimillionaire. If you could pinpoint some of the key changes that you made to get the results that you have today, what would they be, aside obviously from budgeting that we already talked about?
Yeah, so I'd say the first step would be that move of like, look at where your money is going. So many people think they know where their money is going, but after coaching hundreds of people on how to budget, I can tell you most of us have no idea where our money is actually going. The next thing is, I would say, educating yourself on investing and understanding how investing works is one of the most powerful things that you can do because it'll help you make informed decisions. I think a lot of us enter into the personal finance community through the debt-free community. So a lot of us make the same mistake that I made, is that we focus a little too much on becoming debt-free without understanding the opportunity costs and making an informed decision on what's actually best for our goals. So it's usually a more nuanced approach. There's a lot of voices in the space that are like, only focus on your debt. And it's like, the reason that message is so loud is because it's a simple message. It's an easy one for people to focus on. So in addition to kind of just seeing what your resources are so you can start telling your money where to go, I would say also educating yourself on investing as soon as possible in your money journey is going to be a game changer. While being debt-free is totally awesome and a valid goal to be striving for, the issue I see is often we are making that decision to only pursue debt freedom and to wait on the investing because we don't fully understand the opportunity costs. So if we're at least educate ourselves on both options so that we can make an informed decision on, do we want to do like only focusing on our debt, or do we also want to be investing, or do we want to do a mix of both? I think would allow a lot of people to stop siloing into one goal, one debt-free goal at all costs, because that becomes an issue when you're waiting 1 year, 2 years, 3 years, 5 years to be debt-free before you start investing, especially if you're making that decision in your 20s. When you're in your 20s, you have time on your side, and the value of a dollar in the future is so much greater than what it is when you're starting in your 40s or in your 50s. So that I think is huge. And I think it's a step that we often push off a lot longer because investing seems so scary. And so like, only smart people can do that. We don't understand investing. And so that was definitely one of my issues. And I wish if I could do things differently, I had educated myself on investing a lot earlier. But paying off your debt, while I think it is absolutely a great goal, it's not actually building wealth. Yes, it may help you increase your net worth to the point where you get to zero. Exactly. But in order to do that building, you've got to be investing. So I think that's something we often miss in our journeys.
Yeah, I think it's definitely important to find a balance between where you're focusing your energy, because as you mentioned, this time in the market that you're missing out on, if it's compounding 10, 20, 30 years, then that adds up to a lot of money.
It does. And it ends up being a huge amount of money potentially lost. So that's the thing is, I know a lot of people talk about how, if it's over 7% interest rate, you should be paying it off as soon as possible. But it's not as black and white as it is, because the value of your dollar in your 20s is so powerful. Now, of course, anything that's credit card debt or things like that are high interest rate, you're probably going to prioritize that a little bit more than investing, but you still want to be doing both, in my opinion, especially, again, if you're in those early years.
Yeah. So what are some of the beliefs that you had to change to start building wealth?
Yeah, I had to change a lot of beliefs. for the longest time. So I grew up thinking that I was going to be a writer. That was my number one skill. It was the only skill I had. And so that's what I was going to do. So I went to school, got an English degree. I never thought I was going to make more than $50,000 a year. I was like, that was my goal. I, for some reason, believed I wasn't ever going to be capable of earning very much money. And luckily, once I got into corporate America and realized that I was really good at my job and I was really outperforming a lot of my peers, I started to realize like, you actually can make a lot of money if you put in a little bit of effort and you start utilizing your resources and getting these mentors and really advocating for yourself. And because of that shift in my mindset, from when I was living in China, I was making 12 grand a year. And then when I first started in Chicago, I was making 42,000. By the time I quit my job in October 2021, I was making $130,000 a year, which is a huge change. That's between 2015 and 2021. So I think eliminating that belief and truly believing that I could make as much money as I want to make, that shifted everything for me. And it also made the decision to go out on my own and become a full-time business owner a lot easier, because when you own your own business, the amount of money you can make is only limited by you. And it's like you have the possibility and the opportunity to make as much money as you want. But you got to figure it out. You got to play the entrepreneurship game. And so I took that leap because, I had spent years preparing for that moment, but I knew that opportunity existed. So, but of course, I also made sure I had an emergency fund. That actually was a big belief changer for me too, is I used to think, and I heard so many other entrepreneurs say this, that they did not quit their 9-to-5 job until their business income was the same as their 9-to-5 income. And if I had done that, I don't know if I would have ever quit, because I was making such good money at my job where I didn't really have that much work to get to the point where I was making 10 grand a month. I couldn't have done that without quitting my job. There was no way. And so what I had to realize was the only reason I needed that kind of money from my 9-to-5 is because I wanted so badly to quit. I wanted to retire early. So I was investing 50, 60% of my income from my 9-to-5 because I wanted to leave. And what I realized is if I was doing Chloé and money coaching full time, I wouldn't have this urgent desire to quit. I would be doing what I love. And so I was like, you know what? Let me figure out my expenses. What am I comfortable living off of? And do I think I can make that in my first year of being a business owner? And so I came up with, I was like, as long as I can make $60,000, I'll be okay. And lo and behold, I ended up making $60,000 within the first 2 months of being full-time business owner. So it definitely worked out in my favor, but I had to come to that realization that I didn't need to replace my 9-to-5 income, because 60 grand was enough. And that's 5 grand a month. And I was already making 5 grand a month when I quit my job.
So you've been an entrepreneur for, has it been a year yet? A full-time?
Post? Yeah. So I quit my job in October 2021. So in this October 15th, it'll be a whole year.
What's the most surprising thing you learned in the past year?
Oh my gosh, that's a good question. I had always heard about how online courses were really the secret to making money online. And it was one of those things that I kept pushing off and pushing off and pushing off because it's so much work. And on TikTok, people make fun of people for having courses and things like that. And I had to get over that limiting belief of being like, yeah, you're too good for a course. No, it's not smart for you to not to create a course. You're going to burn out by coaching. In October and in November, the first 2 months of being full-time, I had over 60 clients each month because I completely overbooked myself with one-on-one coaching. And so by the end of November, I was dying. I was like, I have to get a course out or else I'm not going to be able to keep doing this. And so doing that and understanding the power of a course, I went from making about 5 grand a month to making between $20,000 and $35,000 a month just from launching a course and figuring out how to do a sales funnel. So that, I wish I had learned that at the very beginning, but I will say, I think that the fact that I spent so much time doing one-on-one coaching made me a better course creator, and it made me a better teacher and a better coach, to be totally honest. So I don't regret that, but it was a very powerful realization that, wow, these people aren't kidding. If you figure out how to do a course right, it's very lucrative.
So do you still do one-on-one coaching?
Nope, I don't do any one-on-one coaching. It's so draining. It's amazing. And like the connection you get with your clients is awesome. And like the impact is incredible, but it's really, really draining. And it's hard to do more than one a day.
I quickly realized that it was taking a lot of energy, but also from being able to scale, it wasn't going to be the way to go for me.
Yeah, it's not possible. And because think about it, I was coaching 60 clients in a month, and the most I was making was $5,000.
Yeah, that's
60,
a lot of energy.
That's a lot of energy for only $5,000. When now I have one course and I do live coaching with that course, it's group coaching, and that maybe takes 2-3 hours a month. And that's all I have to do that's hands-on in terms of just the course. Obviously, as a content creator, I'm always working on things like that. But like I freed up my time, and freeing up your time as a business owner, you've got to do that if you ever want to grow, because you got to focus on what is the next thing that's going to bring in more money that is also scalable and doesn't require me trading my time.
Before we started recording, you shared that you were actually on a cross-country road trip, right? I'm sure that would have been hard if you had to do 60 calls a month.
Oh my gosh, I would have been stuck in the house all day, every day. And the thing is, when I was doing that much coaching, I literally lost my voice. I couldn't talk anymore. It was some of the hardest months of being a business owner that I've ever experienced. I'm very, very grateful that I got a business coach and learned how to do a funnel and launch a course, because that completely changed my life. And it's also, the thing is, it also allows me to help more people. I could only coach 60 people a month. Now 100 people a month are joining my course. So it's like the courses may get made fun of on the internet, but the thing is, a course, it is the shortcut. You can absolutely learn everything that I learned on your own, but it's going to take you a lot longer than if you take a course that you can complete in 30 days. I could not have learned everything I learned, like what I learned on my own, in 30 days. There's just no way. So the course, in my opinion, is always, if you want to collapse time and you want the information all compiled for you in a way that you can trust and you can just work through step by step, that's the way to go.
So how long have you been on this road trip around the country?
Yeah, so I started my road trip in April, technically in February, but my first stop on the road trip was hanging out with my parents for a couple of months, so I don't really count that. But I have been on the road with my dog since April.
What's the best place you visited so far?
San Diego. So I have spent a month in San Diego, and after spending a month there, even though I was telling myself, okay, Chloe, you can't move to California, it's too expensive, it's not practical, I fell in love. I absolutely love being in San Diego, and I was just so happy just to be there. So I've decided I'm going to move there unless something drastic changes between now and when this road trip is over. But San Diego is definitely my favorite. I also loved Santa Fe and New Mexico, and then I loved Tucson as well. It's just not places that I could move to.
I think it's very interesting. You've been traveling since April, so that's what, 5 months? I think so, 5 months. It shows the power of options, right? Because most people don't have that luxury. But you've been able to make changes in your life, and now obviously you have the opportunity to go and experience the country and actually find the right place that you want to move to. So how did you put yourself in a position to be able to make this move?
Yeah, so I mean, obviously the course was huge. There is no way I could have done this if I was doing one-on-one coaching to the extent that I was doing before I created the course and quit one-on-one coaching. I could probably do some one-on-one coaching and it would still be fine, but that definitely your schedule isn't your schedule anymore. So that was massive. I couldn't have done it without that. The other thing is I had to come to the decision that I was okay with slowing a little bit down, because it's really hard to go full on with the business and growing the business when you're also traveling the world, because you want to experience the places that you're going. You're probably not going to be working nearly as much as you would if you were, stationed in one place. So I had to ask myself, am I okay with that? And I was like, all right, this year, it doesn't have to be the greatest building year ever. What it can be is this personal growth journey. So I had to make sure I was okay with that. And that was huge. But also before I quit my job, I decided I wanted to have a 1-year emergency fund before I did that because I'm a little risk adverse when it comes to those kind of decisions. And I was so used to, a certain lifestyle when I was making what I was making at work while also making Cloé income, that I wanted to make sure that if for some reason, if something happened, I would be covered for 6 months to a year with my emergency fund, depending on how much I ended up spending. So that also made the decision to leave on this road trip, knowing maybe there would be bad months, maybe there would be good months, but knowing that I could handle the months that were bad months because I have this huge emergency fund, that made the decision way easier to just be like, you know what, enjoy this. You're okay. You have set yourself up for success. Even if you don't make $1 one month, you're going to be fine.
You said something very interesting here. You took the time to really assess whether you were okay with slowing down for a little bit so that you could experience the world. And I think it's very important that we take the time to understand what it is that we value and not look at, okay, this person has this person has that. You're going to be in a position where you're constantly chasing something that is not even something that you want. So
100%.
it's so important to be in tune with what is important to you. And so you can actually go do what you need to do to go after those experiences.
100%. And that's the thing. I think the FIRE movement, the financial independence, retire early movement gets a lot of criticism exactly because of that. Because a lot of times folks who are investing 70, 80% of their income, they're missing out on their life. I think it's important to find a balance in that, yeah, maybe I didn't end up investing $100,000 this year like I originally wanted, but I lived my life and I found a balance and I still invested more than I have any other year. But I think that you can't give up on your life for a few years just to be able to retire early. You gotta also live it. I know some people who haven't been on a date with their spouse in 3 years. And they wear that like it's a badge of honor. And I'm like, are you guys okay? Like, are you okay? SOS, blink 3 times. It's like, why? I guess if that makes you happy, a lot of people are happy living uber frugal lives. Not me.
To each his own, I guess.
Yeah, exactly. I'm like, not me. I like to spend money. And I think that also makes me a little bit different as a finance creator, is I don't think I'm that extreme. I want you to live your life and I want you to absolutely prepare for your future, but it's up to you to decide how much of that you want to do. It's up to you to decide what is enough for you now and what is enough in the future. And if that is saving less now to live your life more, that's totally fine with me.
You talk about lazy investing. What is that?
Yeah. So to me, lazy investing is the opposite of what I used to think investing was. Before I knew anything about investing, I pictured the guys on Wall Street, people yelling at each other and buying and selling and trading and doing all of this obnoxious stuff. And to me, that was something that was so incredibly unappealing. Who has time for that? That seems really time consuming. It seems really stressful. And it seems like something that I have zero interest in. And so when I was thinking, okay, what kind of investing I do want to do and started looking into and learning it, it was the easy, lazy kind, which is when you can buy and hold an investment for decades upon decades and not worry about what the market is doing on any given day. So the lazy method really focuses on automating things, buying things that you don't have to be paying attention to, like individual stocks. You're not buying individual stocks. You're mostly buying index funds that are going to mirror the market that you can buy and hold and chill for the rest of your life. Because most people, I would argue, don't want to be doing what the people on Wall Street are doing. And as you know, that's not even the most effective way for most people to be investing. It's incredibly difficult to beat the market. So it's like doing that and buying into that narrative that you have to be an active trader in order to make money is not only inaccurate, but it's also just something that's unrealistic for most people. Most people have a job, they have a family. A lot of people have side hustles, they've got friends, they've got things they want to do.
And they just don't have the time to.
Yeah, most people don't want to be paying attention to what the stock market is doing every day. And if you do, good for you. But that doesn't mean you're going to be better at investing than somebody who's going the lazy way. So that's what I focus on. And I think there's layers of lazy as well. So in my lazy investing course, one of the first things we do is we figure out what kind of investor are you? And one of my modules is, all right, let's figure out how lazy do you want to be? Because you could be as lazy as using a robo-advisor and customizing that to an extent if you wanted to. You could be a little bit more hands-on lazy and do a target date fund and pick whichever one that you want from a list of target date funds. Or you could be a little bit more hands-on lazy and pick your own investments that are in the form of these index funds. So there's definitely levels to lazy, but essentially the root of it is picking diversified investments and holding on and not worrying about what's going on in the market.
Can you maybe talk to us about, obviously, this is not financial advice, but some of the investments that you are constantly adding money to?
Yeah. So for me right now, I'm honestly just adding to the stuff that's already in my portfolio. Now, the way I think about building a portfolio, I would still say I'm very much in the foundational stages of my portfolio. Right now, I've got about $150,000 invested, $200,000 if you count my real estate investment that may or may not get paid back out of, but that's a whole other story. But most of my investments, until probably I reach $500,000. And even then, I'll probably still be doing the bulk in what I am doing. But the bulk of my portfolio is invested in the S&P 500. It's not exciting. It's not interesting. And so for those of you who are listening and are like, what is the S&P 500? How can you invest in that? The S&P 500 is the 500 largest publicly traded companies in the US. So it's the Apples, the Amazons, the Googles of the world, these massive companies that personally, I have a lot of faith in, that I consistently over the last 100 years, we've been seeing average annual returns of 10% with the S&P 500. Now, most people are not 100% invested in the S&P 500, so they're not going to see an average of 10% every year, but maybe they'll be around 8 or 9. But anyway, you can buy what's called S&P 500 index funds. All that an index is a grouping of a bunch of different stocks. That's it. Sometimes bonds, but most of the time we're talking about stocks. So the S&P 500 index is a grouping of 500 of the largest stocks in the US inside of it. You can buy an index fund that mirrors the S&P 500. So what that means is this S&P 500 index fund, it's going to have all 508 stocks that are inside of the S&P 500. So what the S&P 500 does, if it goes up 10%, your S&P 500 index fund is also going to go up 10%. If the S&P 500 goes down 10%, your S&P 500 index fund is also going to go down 10%. So that buying those types of investments, those types of lazy investments that have hundreds, if not thousands of stocks inside of them, that honestly is the bulk of my portfolio. I think it was at the end of last year, I decided, I got an extra 10 grand. I've already got, over $100,000 invested in index funds. So I'm going to take 10 grand and I'm going to invest it in some individual stocks. And then we entered into a bear market of tech stocks where everything went down. And I was like, oh my God, this is so funny that the one time I decide to buy some individual stocks, immediately they're all down like 20%. They're doing a lot better now. And I'm still going to just be buying and holding them. But it was kind of funny to see people ask me, they're like, are you 100% invested in index funds? And I'm like, yeah, pretty much. I was like, there's a very small percentage of my portfolio that is in individual stocks, and a very small percentage of my portfolio is in crypto. But that's it.
That's
everything else, everything else is in index funds because it's so easy and it works. I don't think I can do better than the market.
Mm.
I know I can't. I know based off of me picking the 10 stocks that I did, I clearly cannot. So,
So, Chloé, I always end the interview with a round of rapid fire questions.
Awesome.
Tell me about a book that changed your perspective on life.
Ooh, The 4-Hour Workweek. Tim Ferriss, I know, is problematic in his own ways, but he is the king of productivity, I will say, and shifting my mindset of understanding that I don't have to be working as hard as hustle culture makes us think we have to, and that really I need to be working smarter was definitely a game changer for me.
What's one life lesson you learned the hard way?
Don't invest money into an ex-boyfriend's business.
What's one thing about money you wish you could tell your younger self?
As soon as you start earning money, open a custodial Roth IRA and start contributing something to it. Start investing as soon as humanly possible. You don't have to make it complicated. You could literally just start buying the S&P 500 and stick with that until you have your first 100 grand invested. Do that because, oh my gosh, I'd probably have twice the net worth I have right now.
What's the best investment in yourself you've made so far?
Getting a business coach. So have spent, I want to say about $7,000 on a business coach. And first through the course, that was about $1,500. And now I've got a one-on-one coaching session with her coming up. That was about $5,000.
So filling the blank in 3 words or less. Money to me is
freedom.
What do you want your legacy to be?
I want to get as much money into the hand as many people as I possibly can. I think that our world would be a much better place if more people had access to more money.
So, Chloé, tell the dreamers where they can find you if they want to learn more about you and your course and all that good stuff.
Yeah. So I host a free investing class once a week, or I'm sorry, once a month, not once a week. I'm not that crazy. You can find that information at thelazyinvestorscourse.com/webinar. And I am on TikTok and Instagram at Chloé Money Coach. Bear is spelled BARE, but you can find me there.
All right. Thank you.
Thank you so much.